Hello there, and hello there. Welcome back to another episode of TA with MK. My name is MK, and oh boy, do we have a lot to talk about in today's video, although we'll try to keep it under 15 minutes. But we do want to give an update on what the S&P 500 is doing, what its little sister, the S&P E-mini futures, is doing, which, as you know, if you follow my channel, does trade 24/7 Monday through Friday. And consequently, with what they're doing, what does it look like Bitcoin's potentially setting up to do? And by association, what's that going to do to our poor little altcoins? And if that sounds interesting to you, please remember to like and subscribe, and let's talk about it. It's TA with MK. It's TA with MK. All right, well, I'll try to keep this somewhat brief, as there really isn't a whole lot to say other than, the S&P 500 in this case, which this is the daily chart, the SPX or the S&P 500, and it's at resistance, and there's actually confluence with actually several areas of resistance coming together. And until we see what happens over the next day or two, you really shouldn't be, if you're not in any trades already, you really shouldn't be, opening trades at resistance. That's one thing that I was taught, early on when I began to learn to trade, was you don't short at support and you don't long at resistance. You want to wait for, verified breakouts or verified breakdowns to open up, long or short positions. And so what do I mean by that? Well, if we look at the daily chart here for the S&P 500, we can see here, this is something I've been tracking for a while. I won't go into too much depth about this falling wedge or any of that, but the price levels that we've been eyeing, we had this red zone of resistance that did act as, resistance at first, but then it broke through it, and above this blue 200 EMA, or the 200 exponential moving average on the daily. And now it has pushed up to this zone that I've been talking about for some time, which is the level at about 4,300, which, depending on when we reached it a little quicker than I would have anticipated. You could just see that some things were coming together. You have this trend line up top, which has been resistance once, twice. This is not super valid. However, it is something to take note of, that right now above us is sitting at about 4,360, but the longer it takes to test that, it gets lower and lower. You have this yellow 200 SMA, which is the 200 simple moving average on the daily, which that will act. That's an area where it's considered on a daily chart, anytime you're below the 200s, that you're overall bearish, right? It's a downtrend essentially. And anytime you're above it, that's considered a bullish chart, or you're in an uptrend essentially. And so there's a lot of things coming together here at the same time. This price level, this trend line, the EMA, that are all in their own ways or together are going to act as major resistance. Also, I don't talk about this indicator a whole lot over here on the right, but it's the volume range profile. It's the same basically as the volume that you see on charts down at the bottom. That's just showing you if there was a lot of buying and selling that happened at that particular candle. In this case, it's showing you more from a side range of as far as price levels. How, for example, this sticks out down here. This shows you that this whole area down here, there was a lot of buyers and sellers in that area. This one up here being the biggest on the daily, up at these higher levels. And, then you see areas like this where it just kind of does the opposite, where it's kind of a little crevice. This is what's called low volume nodes. Price action moves through those typically pretty quick, because there's just not a lot of, price action that's happening in those levels. Not a lot of people waiting to buy or sell in those areas. And so that's just kind of how that works. And you can see that anything above us at this point just gets worse and worse and worse as far as higher volume nodes, right? So there's going to be, that's stronger resistance. All the moves that we've been making down here, there was areas of resistance on this and price level and so on. But, if you think it was, how long it took us to get through all of that, how hard it's going to be to go any further when you have other things like the 200 above you and a trend line, it kind of puts into context just kind of what, in this case, the SPX or the S&P 500 is up against going forward. So if you're a trader and you're say you're in a trade already, this is where you would be taking profits, at least off the table, as long as you're, somewhat smart and disciplined in your trading. This is where you'd be starting to be very cautious, watching the moves closer for potential rejections and so forth. So plan A, plan B, that's kind of what you come up with whenever, you're at levels like this of major resistance. I already stated, and I think it would be smart if you're in positions to take profits. or at least move stop losses up. Just start limiting your risk at this point, because we don't know how, until the next day or two play out, what this is going to do with this level of resistance, right? So plan A would be, okay, this just breaks above and, turns the 200 SMA into support, turns this orange level into support. I don't think the trend line's necessarily as important anyway, but that would essentially also be flipping depending on how high it went first into support. Plan A would be, okay, once that retests and starts to trend higher, long everything, It wouldn't really matter what you chose. If you're trading crypto, Bitcoin, choose your favorite altcoin. Some are going to move more than others. Some are going to have exponential gains. Some are just going to follow Bitcoin for some moderate gains. But you could literally choose anything and everything. And if this breaks out and retests and starts trending higher, you're going to get a move to the upside, right? At least up to, say, like here, and then, maybe next one resistance is like right here. There's a bunch of resistance levels. However, just a breakout like that on a daily pattern, daily chart like this with all this coming together would be a pretty major breakout, and you would see a pretty darn good move out of, all stocks across the board, right? So plan A, which is to me the least likely to happen, at least right away, it's the least likely to happen, would be that. Plan B would be, well, plan A and a half, I guess, would be that it doesn't get rejected harshly right away, but it consolidates. Whether it consolidates in a bit of a bull flag right below this resistance, where it kind of goes sideways. Maybe it even comes back down and retests this and ranges like this for a bit, and then breaks out somewhere, later in September. That would be plan B, which would still just be a sit and wait plan, right? You're not exposing yourself, or if you're in positions, you've moved stop losses up into profits. If they get hit during some of these small pullbacks, great. You still made money. If they don't, great. You're still in positions waiting for this potential breakout to happen if and when it does, right? So that would be plan A and a half, or we could call that B, I guess. Plan C, which to me is the most likely right now, which just because it's the most likely, also gives me hesitancy that it'll actually happen, because one thing I do know about these markets is they love to do the opposite of what we think is going to happen. But just speaking purely statistically, we have a lot of, confluence of resistance coming together at the same time. You can look at things like this stochastic RSI, it's up here, super overextended. This is the money flow index. It's about to exit the purple area and go into its own overextended, or as they say, overbought. The RSI has some more room to go, but you can see, some of the rejections it's had back here at levels close to this. It's approaching that level of 80, and it's only at 72, so yes, it could push a little higher, but it's reaching its own areas of very, very overbought. Or overextended, as they say. It's in a bit of an actual rising channel of its own here, which I guess you could chart that out and actually use that as your way to kind of gauge if this breaks down at some point. Let me go ahead and click on that so you can kind of see what I'm talking about. This is something I do a lot too, is actually chart the RSI. I don't mention it as much on the channel, but within my Telegram group, I mention it all the time, that I chart the RSI, find patterns on the RSI to kind of give me an edge. You can draw these a few different ways sometimes, but, at the end of the day, just, you're trying to see this rising wedge, does it break down? If it does and retests this way and starts trending back this way, you want to exit your positions, of course. So those are a couple of things, if you just look at, they're all kind of coming together at the same time, as far as just being, I guess, points for the bears, right? Like, there's not a lot you can point to outside of just the fact that we've been in an overall uptrend that's going to give us reason to believe the bulls, at least at the first try, will break out. That being said, doesn't mean it can't happen, and so that's what plan A was for. At any rate, the way that I would play this, I already gave you how I would play plan A. Breaks out, retests, starts pushing higher, boom, long everything, pick whatever you want, doesn't matter. You're going to make some money. Obviously start charting the next areas of resistance as you go up. We'll talk about that going forward if that happens. Bump stop losses up, take profits, in increments, so on and so forth, right? Same thing for plan B, which was if it just takes longer to break out, you just wait. Well, maybe it does an ascending triangle below resistance, then it breaks out here, sometime in or late August, early September. Boom, same plan as plan A at that point, right? Plan C, this is how I would play this. It's going to take some time to play out, and you're going to miss out on some of the move. An aggressive move would be, to short now, actually, to short now, or at least if it gets rejected by the 200, and just have stop losses back up above, the areas of resistance. But the safer way to play it would be Okay, we lose this, we retrace back this level, we come back down, we don't find support on the 200 EMA, which is this blue exponential. We lose that, and then the same red zone that we were previously speaking about now becomes resistance with the 200 EMA overhead. Then you open up shorts. I'll link in the description, obviously, for some of my videos I've put out on how to leverage trade. You need to learn to manage your risk. If you're brand new, I'd avoid those altogether. However, if you're careful and you take your time and practice with small amounts and all of that, you can also make lots of money in this market even when it's going down. But this would be what I would be looking for. Do I think just because we get rejected here that we're suddenly going to go all the way back down, to these crazy low levels and Bitcoin's going to go back to 17K? No, I'm not saying that at all, actually. It just means we could probably see a healthy retrace. We haven't really had a healthy retrace for some time. So something like it coming clear back down to this green box at about 40.60 over the next, because, you can see that when it first broke out of that box, it was August 1st, basically. So it took it about 2 weeks to get to this point. So, it could do something similar, week and a half, 2 weeks to go back down to this point again, right? You see something like that, that's going to be a decent little retrace for traditional stocks. That would be something like a 5.5% retrace for the SPX, which something like Bitcoin would see a much, much larger 15 to 20% retrace, right? So this is what we'll be keeping an eye on as far as the S&P 500 goes. Now, quickly before I show you the levels I'm watching for on Bitcoin, this is the ES1 exclamation point, or the S&P E-mini futures. This is the one I spoke about in the intro that trades 24/7 Monday through Friday. So even though the traditional one's closed, this one is probably going to be the one I'll use over the rest of tonight and early into tomorrow to get a clue as to what the regular traditional one's likely to do, right? And you can see here that it's been bullish. I mean, this is just the hourly chart, so this is only price action going back to the end of July here. But it was in, not a perfect, but it was in basically this rising channel, which is a pattern that should break to the downside, statistically speaking, the majority of the time. I think it's 68%-ish. And it broke to the upside and even retested it. So boom, that's very bullish. A lot of times when something breaks the opposite direction that it should, you start looking for parabolic ideas, actually, for it to make a crazy impulse wave higher. And it's kind of starting to do that again. Now we have this new, even steeper rising channel. And if you track, this is not something I've ever really spoke about on the channel, but maybe I will put a video out at some point that kind of dives into this. But there is something known as like the parabolic step-like curve pattern. It's not really something that's, I don't know, really tradable as far as it doesn't really have a measured move per se. But really what it is it's the idea that you have an impulse wave up and you make a little base. Base 1, impulse wave up, base 2, impulse wave up, base 3. And then eventually it just gets steeper, and then it ends typically with the blow off top, right? Where it just kind of, when it's all said and done, it just does this, where it gets steeper as it goes. Another way to look at it, actually, if you're just tracking it on lower time frames, what often happens is it will start out with maybe a rising channel like this. Boom, 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 it breaks out, right? Then it does what the ES1's doing right now, where it makes it an even steeper pattern. And then it breaks out of that against all odds and just goes boom to the moon, temporarily, or at least a moon that's, still on Earth, I guess. Just not the literal moon, but it goes on a crazy little shot to the sky, right? And then it has what's called a blow off top, and boom, it just a huge sell off, right? So it's a pattern that can be very fun to be a part of as far as making quick gains, but if you don't sell in time, it's a pattern that can also be devastating, because when it retraces hard, because it isn't really building bases, right? It's just going up and up and up and up. So we're at that resistance on this as well, just like the S&P 500 was. I didn't really have a whole lot to say other than just that. It is still showing signs of wanting to break out. If this were to break above this level of resistance, which just on the hourly, that's kind of our last little zone of EPVR resistance as well. If it flips that area of 4,300 on its own chart into support and starts to look like it wants to trend higher, then you could almost guarantee that the SPX is going to do the same thing tomorrow, which is going to drag Bitcoin up. So I just want to point that out. Again, you just look at this, and it looks like something that needs to retrace, right? It's already broken up higher out of this wedge. Now it's doing, this even steeper wedge. It looks like something that is, needs to, consolidate sideways, if anything, for a bit, or potentially break it down. And if it breaks down, you don't have a whole lot of support, at least on this chart, clear back down here till, where it bounced back here at about 4,200. So We will also be watching that in confluence with the SPX. Now, the Bitcoin daily chart, in my eyes, is really rather simple. You can see that back down here when we were still kind of in this ascending triangle type pattern that we talked about previously on the channel, that we had this wick up above 24K here, but ultimately the candle got rejected pretty harsh and closed clear back down here at below 23.5. You had several attempts here on dailies to close candles above 24K, could not do it. And even as recently as, August 8th, 9th, and 10th, you had these 3 candles in a row that kept breaking above, but refusing to close, actually 4 candles in a row, refusing to close above 24K. Finally, on August 12th, which was actually my birthday, coincidentally, but anyway, Bitcoin actually closed its first daily candle in some time above 24K, which was sweet that it closed the next day. Now we're getting a ton of sell wick pressure, but, for as long as we can hold 24K, which today's daily candle actually closes really soon. I don't know why it's not, it is telling me 27, about 30 minutes, just under 30 minutes it closes. Now, I don't necessarily think that if it closes below it, that's the end of the day, but that is a pretty big level. And at least for today and going into tonight, if Bitcoin can close above 24K, I'd look at that as still bullish, even with all this sell pressure, because it's just a level that we spent so much time trying to close above that, you can kind of get the sense if we lose that we may free fall back at least to these levels back down here, where some of these candles previously were closing, and a lot of candles here, which is, basically the 23,000, we'll call it 400 area. I have this blue support level at about 23,650 as well. So between 23,400 and 23,650 is where I would expect we would go if Bitcoin loses this or closes today, especially below the 24K level, or starts closing, hourly and 4-hourly candles below that. At the very least, I'd expect to retrace back to that level. There's also this large kind of rising wedge. It's not perfect that I have drawn. And if we lose that level and retest it bearishly, this level at about 23.7, 23.650, like I said, would also be the underside of this trend line here. Then at that point, I think we could see a retrace back down here to a level that we previously spoke about, which was very, very important. I talked about it back here needing to hold, and it did, which was the 22,500 to 22,600 range. Now, I don't know that would be an area that I would expect a major bounce at. It would really depend on what the SPX was doing. I do think it would bounce there naturally, maybe even back up to retest this again, form a double top. I'm not trying to predict, just giving some, I guess, examples of what could happen if we're not able to hold this 23,000. Really, let's just call it, like I said, 23,400 to 23,600. If we can't hold that area, then I think we at least come back down here, and at that point, probably lose that and wind up coming clear back down to this other trend line, which is just kind of this major rising channel that we've been in, right? And, then you're looking at back down to like 21K, which was a level I had spoke about weeks ago, as far as where we'd probably end up to the downside before we'd see any major bounce if we could never break out, and start holding 25K as support. But that doesn't mean that we can't make one more attempt higher, especially if the XPX tries to break out or show signs of breaking out. And I think in the short term, that's what I'd be eyeing, is if we do break down a little more over the next, between now and when the SP 500 opens tomorrow or midday tomorrow, watch for this level at about 23,400 to 23,650 to hold. And if it does, then I think we make one more push higher, and we probably attempt to break 25,500 again, and that might happen in the next few days, might happen over the course of this next week, depending on what the S&P 500 does. And that is where I'll leave off for today. I appreciate you guys sticking around. I just recently broke 150 subscribers, and I owe a big thanks to you guys that have, liked and subbed so far to the channel. If you have been watching the videos and you haven't done that yet, please do me that huge, huge favor, and remember to hit the like and subscribe, and we'll catch you guys tomorrow. It's